3rd, 2021. It is 9:16 a.m. You're coming into Price Action Trading with Saul. Saul Shawool is your host and mentor. He's been actively scalping for 25 years or so. He's a CME Group floor member. Usually you'd be chiming into Saul through the service right down to the trading pits in Chicago. Because of the pandemic, he is at an undisclosed location. Everything we do here is for educational purposes only. Nothing is to be taken as direct trading advice. Hey, Mark, good morning. Direct trading advice. You're trading between you and your broker at your own risk. This is a serious educational opportunity about the concept of developing consistent profitability in trading and having a successful trading business. A successful trading business. Hey, Robert C. Yesterday, did you manage to sign up for Saul's monthly? Not sure. I didn't check the record for today, but I think you did. So let me know back in chat. I don't want the bot to sweep you out, you know. Hey, Glenn. Hey, Don. Those that are joining us on the outside, join us on the inside. Look for the link. Hey, Warren. How are you? Robert B. Hey, Oscar. Michael R. Michael K. Hey, Michael K. I'll look for you in the background so I can set you up for that. KG. Hey, Fred. Anupam. Ben. Bemal. Hey, Rob, you've been on look for how long? You're killing me, buddy. And then take the cap locks off, will you? Why don't we get that done today and let's get off the old looking, okay? You've been here for long enough. And it's nominal. Join the family, man. Hey, Jeremy. Good morning. Welcome. So in this service, we teach and mentor traders how to trade. Hey, Biger. Put up an S&P 500 E-mini chart. Remember, this is an opportunity for you to either start out in trading, set off on the right foot, which, I think on a daily basis here, there's the opportunity to learn an awful lot about trading and an awful lot about your, where you are on the curve as far as skill. And every day there are pointers, there's observations, there's all sorts of things that happen here that that are worth any price to have an edge over other traders and look to utilize that edge over other traders because you're trading up against other traders. That's how you win at this game. You got to be better than they are. You've got to be smarter, faster, more skilled. And that's what we look to impart to you here is that opportunity. That knowledge. So strap yourself in. Saul's going to be joining us shortly. Focus here is the S&P 500 E-mini. For new traders, join the family. Ask, raise your hand if you want to join the family so that we can set you up properly. So you have the right software, you have the right data service, you have the right opportunity to trade the S&P 500 E-mini. For those that are coming in, the deliverables today and every day are Sol's trading advantages for himself, which is his price action trading levels, which are areas he believes the market's going to make change, and he can capitalize on that change by putting trades on in and around those areas. So he is laying out a roadmap for you today. He's giving it out to you in audio. He's posting it in the Zoom room. And these are the areas that you should be loading into your software for this morning's trade. If you don't know how to do that, we'll help you with it. Just make sure you become part of the family. What does part of the family mean? It means uh, raise your hand. I'll send you out a link. It's a very nominal fee, and you can come and go as you please, and you can start your process of really learning how to trade. And that's what we do every day. And that's what the opportunity is that presents itself to you this morning, tomorrow morning, Friday morning, and we go from there. So remember, you're the ones that have to raise your hands. You're the one that has to get involved. I can't do it for you. Hey, Joel, how are you today, sir? Hey, Kurt. Good morning. Michael K, let me know how you made out. Hey, Peter O. Hey, Timothy. We have a very nice group in here of individuals that have been with Sol for a long time. Okay, good. You have the link. That's great, Michael. And make sure you exercise the link because I want to make sure you get the opportunity. Hey, Nicola, welcome back. Hey, Nicola, did you get the link that for Sol's? It's so funny. I sent you out the wrong link. Sent you out the link to come in. So I'll send you out the right link now. Hey, Ben, I'll send it to you so you have it, so you know what we're talking about. Jeremy, let me know if you've done that already. I'll send it to you anyway. Just let me know back in chat. I'll send it to you. Joe M, the same. I'll send it to you so you have it. And when you read it, you understand. It's really a special opportunity. Robert C, I think you've probably done yours already, right? Hey, Ron. Ron B. Ron, I gotta do something for you. You're all set. So the voice you're gonna hear next is Saul's. He is actively scalping the market. He'll look to do that today based on his price action trading strategy and his proprietary scalping levels. He's going to give them out to everybody. Remember, this is a service, a well sought after service. So play the game fairly. Make sure you sign up for his monthly. Take advantage of what I'm sending out to you. If you don't, then you get exited. If you get exited, that's not our problem. We want to help you not get exited. We have an AI system, artificial intelligence, that calculates how many days you've been here. It understands the conversations that we have, and hey, Maureen, good morning. And it exits you and puts you into Zoom purgatory or Zoom jail, and we don't want that to happen to you.
All right. Good morning, everyone. Can everybody hear me all right? All right. I'm trying to get over that last statement. AI system. Oh my God. All right. Let's give you our good morning. Let's give you our levels for this morning for the mini S&Ps. It's February 3rd. And the market kind of slowed down a little bit here after yesterday, the last couple of days rally. Settle into a little bit of a range here, probably waiting for unemployment on Friday to find us our next opportunity here. Probably need a little bit of a break after Thursday, Friday, and then the last couple of days. Market's kind of a little exhausted, maybe throttle back a little bit, and we'll see what happens today. I don't know. Who knows, right? We never know what's going to happen day to day. We just come prepared with game plan and let the market kind of dictate our next opportunities. Let's give you our levels for this morning. Our pivot this morning is 38.29. Resistance at 35, 43, 52, and 62. Support below at 23, 14, 04, 37, 94. Pivot 29, support 23, 14, 04, 37, 94. Resistance on the upside at 35, 43, 52, and 62. All right, the market, again, like I said, kind of a little taking a breather maybe. Who knows? We'll find out. A lot of activity the last couple of days, few days, so we might consolidate here for a day or two before unemployment number on Friday. We'll see. Welcome to some of the new folks that are here. We are trading mini S&Ps. We are using our levels here and price action opportunities because we don't believe markets go straight up or straight down. Consequently, we're looking for those inflection points that give us the opportunity to scalp the market, usually about 2 to 3 points, depending on volatility, sometimes more, sometimes 2 to 3 points is our minimum. But again, it all depends on volatility. We use these levels in addition to price action, which occurs once the market paints some bars. So the combination of both gives us the setups or the opportunities to trade. If we can repeat this, we can print the levels in the chat box area. There they are. Those are the levels that kind of be our guide as the day goes on. But remember, there's price action opportunities that occur after that. Yesterday, we had a few of those that we tried to keep you long at some point and got us to our upper levels as we were trading the market. So again, they're just a guide. They gives us a script for what could happen, what might happen. If it happens that way perfectly, it's great. If it doesn't, we have to adjust a little bit, and that's what trading is all about: is making adjustments to market conditions, to what's given, to what you have in front of you. Like I told some people yesterday, if I knew the market was going to rally all day long, I would have told you right from the beginning of the day, and that way we would have both been happy. We wouldn't have had to struggle, and it would have been a nice, fun opportunity for us to make a little bit of money together. But unfortunately, I did not know that the market was going to go up or down the last few days before that. So we have to come in here with a game plan and just kind of let the market kind of dictate what we're going to do. So we quickly come down here to the 22. And I remember I've said this plenty of time that the first couple bars here, because of the volatility that's people wait for this 830 level to start trading more. The volume becomes increased. And so you have a little bit more volatility in the first couple bars in the morning, first 5-10 minutes. So they become a little bit more riskier to trade. We always have reasons. We always want reasons to trade. We're always layering in reasons to trade. And in our education course, we have ample opportunities to teach you those reasons. And then you have to make those decisions on your own as an independent trader, because at the end of the day, that's what we're trying to do here. We're trying to give you the opportunity to independently trade these markets. It doesn't necessarily only have to be S&Ps. You could trade other markets with the methodology that we teach. And so the goal of the course is to be able to find the levels on your own, put a game plan together, understand the risks involved. Well, I try to show you or let you understand the risks involved. I always am not privy to all the risks sometimes, because nobody is. That's what the markets are all about. There is plenty of risk in all the trades that you take here, but we try to minimize the risk as much as possible by giving you reasons to trade and giving you reasons not to trade. So as long as we understand, or hopefully you understand what those reasons are, it'll help you determine which trades to take and which trades to hold off on. And not everybody's the same, right? Not everybody here has the same risk tolerance. And so some people like to trade right off the morning. Some people are trading at night. They have a little knack for trading at night. I don't personally, but that doesn't mean that you don't. As a trader, everybody's a little bit different, as we're trying to bounce here off of our 30-23 area. And we got a nice little rotation here off of our 23 area. And a nice quick 3 points here. So if you did take the level here, it's a nice little trade for you. Got easily some 3 points here, and had to work it there a little bit, but it kind of held, right? You kind of saw it hold there, gave you a little more confidence. Maybe you got in a little bit better because of the way the price action was just before it. Hopefully, combination of all of that allowed you to get in, and this is how you can take more than 2 to 3 points on your trades. If you have multiple contracts, you're scaling out of them, and you're able to take advantage of this rotation off of our 23 support. This is what we try to do. We try to find these inflection points in the market, because, like I said, we believe we believe markets don't go straight up or straight down. And so we're trying to find these inflection points, and sometimes they're easier to find than others, and sometimes not. But obviously the 23 here worked very nicely, and if you're trying to stay long, we'll look for a push all the way up to the 35. Kind of weird how you go from our first support level to our first resistance level all within 5-10 minutes. Doesn't usually happen, but this is what trading is all about, right? To always expect the unexpected, right? And that way you don't get yourself in trouble. So welcome to some of the new folks that are here. We have support down there at 23. Some people say, oh, do you show your trades, this and that? No, I don't show my trades, but I talked about my trades. Well, obviously, a support level of 23 allows you to buy the market down there. And that's a support level. That's what that means. All right. And like I said, some people take that first level off the morning, the first bar. Some don't. It's a little bit more risky. My job here is to make sure that you understand the risk and then make the decisions on your own. Because like I said, everybody's a little bit different as far as your entry points and exit strategies are concerned. A little bit volatile here, as you can see. It's kind of whipping around here quickly. it's kind of doesn't know what it wants to do, right? When it does this, and you can see overnight trade was basically created a lot of value between the 36, 37 area and down here at 26. So we got a little bit of a range bound trade. Uh, see what it wants to do. Just be patient and wait. Like I said, we had a nice rotation off of our first support, and now just ran up there, caught a few people short, right? And that's what happens when you have these rotations from lows to highs, especially in a tight range. And the market basically just caught some people short on the downside. They all got out, and then all of a sudden they said, "Oh, there's no more buying because all the shorts are out." Then they start selling it. Yeah, maybe. I don't know. I don't. Maybe. Mark. Maybe. We have. Let's see. We have an 8:45 in about 7 minutes. We have PMI number at 9 o'clock. At top of the hour, we have ISM service index. So we have a couple numbers to be released here that might affect the market. And that's going to be coming out here in 8:45 and then at 9 o'clock. So a couple numbers to hear. We don't like to trade numbers. It's not something that we like to do. So we try not to have any positions on when numbers are released. It's good for our sanity, and then we can always wait for the after effect of the numbers for us to trade. As we quickly are just basically just bouncing around here. This trade, even though, I mean, we did have our support down at the 23, so you were able to maybe take advantage of the rotation to the upside. Hopefully, if some of you did. If not, then we had 35 on the upside of some resistance. All it did is it got up to our to the 32 area, which maybe you could have sold it there if you were a little aggressive and wanted to take our green band. Some of you like the green band opportunity. And maybe got short there, or maybe got out of any longs. I don't know, depending on how you trade. It's also the blue band in our hourly. So you had a couple reasons maybe to sell it on this rotation back. But if you did sell the 32, you would have probably had to sell the 35 also. Again, we scale into a position. We're not perfect. We could go down to, in this case, we went down a little bit below the 23. So you were able to buy the 23s and a little bit on the low end as well, or even if you waited for on the bar to settle down, you were able to buy it a little bit better than that. Again, depending how you are looking at these opportunities. So we scale in around the position, right? I wouldn't get the 23 again. We like it the first time to it. Second, third time, it's a little riskier. Doesn't mean it's not going to work. I'm just saying it's a lot riskier the second time to it. We're looking below now at 14 as the next support level. If you're going to do it, you have to understand the risk. I'm not saying it's not going to work. I'm just saying that there's a lot riskier the second time to it. So, especially since we made money on it the first time, right? So, I mean, it's working, but it's a lot riskier. Again, I'm not telling you not to take it. I'm just telling you it's riskier. So again, a couple numbers coming out. Hang on one second. Couple numbers coming out here in about 4 minutes, and then top of the hour ISM services. Then we have a couple of Fed speaks at 12 o'clock, and then at 1 o'clock, and then later on tonight at 4, and then at 5. So at 12 o'clock and then 1 o'clock, a couple of Fed speaks. So if you get some volatility around that time, maybe they say something goofy. Who knows? We don't know. We don't know what they might spout or not. But you never know. But it's out there. So anytime a Fed speaks, you could consider it as like a number, because they could say anything that could create some volatility unbeknownst to us. At least if you know that there is somebody talking at that time, you can either trade a little less. Hopefully, you're not trading. Remember, we like to focus more on the morning hours. If those of you who've been around a couple times here know that we don't trade so much in the afternoon. We're around. I'm not saying sometimes I teach our education course is taught in the afternoon hours because we like to use live charts to teach the concepts that we have. But we focus more on the morning hours because of the good opportunities via the volatility. We think that more traders are trading the morning hours. There's more volatility. There's better opportunity as far as ebbs and flows. It seems like the market does its thing for us in the morning versus the late afternoon. So if you are trading, focus on the first couple hours and kind of tread lightly the rest of the afternoon. I know it doesn't mean that we don't trade at all, but just trade smaller, pick your spots. You don't have to keep trading every price action opportunity that occurs. So there's a different kind of trade in the morning versus the afternoon. That's all I'm trying to say. So we try to focus more in the morning because you get good ebbs and flows versus one-way trade. I think sometimes, like you saw yesterday, you get that slow rally the rest of the day in the afternoon. But we were trying to keep you long, if I'm not mistaken, yesterday because of the price action. And we did trigger some of our levels very nicely there. So hopefully you were able to take advantage of that. Even if you traded in the afternoon, we got a little roughed up in the morning, but I think we did okay as the day went on. Let's see. So a number coming out here in about a minute or so. Keep that in mind. Could be a market mover, could not be. Sometimes you never know. You never know how the market is going to perceive these levels, these numbers. Sometimes it's a little clear cut. Sometimes it's not. Who knows, right? I mean, all I can tell you is that I don't like trading numbers. I've had many experiences where I've had positions during numbers and they don't seem to go my way. I don't know why. So instead of you feeling the pain that I've felt many a time having a position on, sometimes I couldn't control the fact that I got flat quickly enough before a number was released. I mean, the bigger numbers, everybody was, yeah. No, those numbers you can stake. Remember I was trading in the bond pit, and numbers came out at 7:30, the earlier numbers, and there was another set of numbers at 9. So the earlier numbers, if unemployment, nobody had a position on because it was a big number, and so you kind of flattened out like a minute before. And you could see that happens in the ladder ticket. And if you look at the ladder ticket right now, it's pretty light, right? There's no 100 lots up and down the ladder ticket, so you always can know that there's a number to be released when you have a very light. Looks like when the volatility is crazy, you get these like the ladder ticket lighten up, right? And then the number's out now, and the orders will slowly come back into the ladder ticket as the market absorbed this number without anything much happening. But yeah, so people lighten up on their order book, lighten up on their positions that they have. They like to get flat, and so when we were trading in the pit, you always knew when there was a big number because that's why you were there. That's why you opened up at 7:20 so you can trade the big numbers. And then and then sometimes though when you're trading and there's a 9 o'clock number and the bigger numbers you kind of were able to get flat before, but then when you get the smaller numbers and you're kind of trading through it and you forget that if you're really busy and you forget that a 9 o'clock number comes out and then you got a position on it, and then I always wonder what happened? Why did it just do that? And you're like, oh shoot, I forgot that there was a number that came out. Yeah, happens to me all the time. Happened. But now and I think a couple of weeks ago, I forgot to mention that there was a number, and we reacted to it because it came right up against our a level right at that time. I kind of felt bad because I forgot to warn everybody that there was a number to be released. Kind of figured it out when I saw the ladder take a lighten up, and I was like, "Whoa, what's something's up?" And I quickly checked, and sure enough. Anyway, anybody have any questions? Chat them, chat them. Put them in the chat box area. I can see that I have that window up, and I can see your questions fairly quickly. Don't be shy to ask any questions. I can honestly tell you that when I go into a webinar or a Zoom thing, and I hate asking questions. Right? I don't. It's not my favorite thing to do. But so I know if you're a little tentative or a little, you know, holding back, don't hold back. Just ask any question you want, and especially if you're trying to understand what we're doing here. Remember, I work with everybody individually, so we get to know each other a little bit. If you decide to take our education course, so I can understand your strengths and weaknesses and try to work with you and sharpening them up. So don't be shy. So we're just kind of floating here in this range that we got ourselves into after the opening, and a nice rotation down to our first support level there at 23, and a nice rotation back up. Got right up to our green band there. If you were a little aggressive, maybe you partook in that trade and got short, and then came back into this range. Do I know it's going to do that? No, I don't know it's going to do that. We just know we have these inflection points, these setups that we look at. The market has told us in previous opportunities that this is where the market might give us an opportunity to trade. Does it work every time? Absolutely not. Does it work a lot of times so we can make money? I hope so, because that's why we're still here, right? So these opportunities are there. It's just a matter of finding them and then trying to take advantage of them. And all of this depends on how much risk you want to take as an individual trader. And everybody's got different risk tolerances. You put the quarter in me, I don't stop talking, right? I hate to talk. It's amazing. But I got to keep us alive here while it's just chopping around, right? All right. Let's give you some news from some things that might affect the market. Obviously, it's earnings season right now, so we have earnings are coming out from these big corporations that affect the market. Amazon posted record revenues of more than $125 billion for the fourth quarter after the closing bell on Tuesday, up a whopping 44% year to date on the holiday and pandemic-driven demand. But the biggest news wasn't ringing the register. Jeff Bezos said that he would step aside later this year, though he would remain engaged at Amazon as executive chairman. And the Jassy, the head of the company's cloud division, will take the helm of the e-commerce giant in the third quarter. Although Bezos' departure was announced last year, Amazon's consumer boss Jeff Wilke officially made his exit last month and was considered the number 2 at the company. Jassy is also an Amazon veteran. He's been with Bezos since 1997 and was the architect of Amazon Web Services, which is how Amazon makes most of its money. In recent quarters, Amazon Web Services, AWS, has netted net sales of $12.7 billion with operating income of $3.6, more than half of the firm's overall operating income. AWS has also market shares of around 34%, according to some research group. Why is Bezos taking a backseat, being the CEO of Amazon? I mean, when you got gazillions of dollars, I mean, at some point you got to say, all right, hey, I'm going to enjoy this. I mean, why is he taking a backseat? Seriously. But that does go to the question of, when I was trading on the floor and I saw some of these big traders take huge amounts of risk, I always wondered, why did they keep taking the risk? I mean, these guys could easily retire in be happy forever, right? But they every day they come in there and they take huge amounts of risk where you can make or lose hundreds of thousands of dollars a day, right? Obviously, they've made it in the past, so but that's not the point. The point is, why do you keep coming in and why do you keep taking the risk? I've realized that the reason that they got to where they are is because they kept doing the same thing over and over again, and they it wasn't they didn't care about the risk. They just traded, and that's how they became the way they became. So I guess it's conceptually it's hard to understand why somebody who is who can make or lose $1 million in a day or more on a trade, even forget a day, is still trading when he can just hang it up and be okay. I mean, well, they do have expenses. Like one big trader that I had the pleasure of trading with. They do have when you trade that big, you also have bigger expenses. Like he had this home in Wisconsin. He used to travel to Wisconsin right on the border, and so he had this big estate. And so the upkeep on the estate was like $100,000 a month. so I mean, you have to keep making money to be able to handle your upkeep on your on your properties that you own, right? So I guess excitement. I don't know if it's excitement. I don't know. I don't know if that's the reason you keep trading. There was a couple traders though who did this, who made a lot of money, right? And they just stopped. They took their money and they retired. And I know one of them went and started teaching at a high school, and just kind of that's what he did. He made all his money and decided that he didn't want to take the risk anymore and just retired at a young age and started teaching. That's what I should have done. Then I wouldn't be here talking to you, right? Yeah, I don't know. I had a lot. I had a lot of expenses too. I mean, my girls were, Mark. The girls are expensive, Mark. Just putting it out there. All right. So again, we're still range bound here. I don't know. This is what happens when we're range bound and we're trading in the same range, and you hear me say stupid things. Anyway. So let's see. The trading volatility is seen after hours before Amazon shares ended the session slightly lower as investors digest the news. Amazon also said the first quarter would be between 100 and 106 billion. They slowed down in the fourth quarter, but an increase of about 33 to 40% from a year earlier. And they expect coronavirus-related costs to decelerate after several months of heavy investments. Amazon also revealed the design of a 350-foot tall HQ2 in Virginia, which features spiraling outdoor walkways and was dubbed the Helix. Revealed the design of its 350-foot tall HQ2 was a headquarters in Virginia, featuring spiral outdoor walkways. Okay, HQ2, I guess. 350-foot tall. Was that about 35-story building? All right. So we are still range bound here, trying to decide which way it wants to go. It kind of is a little. I think we get below 20, we might rush down to maybe to 14 if hopefully we don't stay in this range. We do have a number coming out here at 9 o'clock. So this is what happens sometimes. We get range bound and all you do is listen to me talk. It's not good. U.S. stock index futures are moving a little bit into the green now for the third day, powered by strong tech earnings, stimulus progress, and a broader vaccine rollout. The Nasdaq is leading the pack with the contracts linked to the index ahead 0.7% on strong results from Amazon and Google, while CEO Bezos would be stepping down, leading Amazon shares to decline modestly. Alphabet, Google soared 7%. After hours, the tech giant blew through forecasts with ad spending recovery and broke out operating income from its cloud business for the first time with a loss that showed the business is still in the investing mode. I hope to do this full time and give me freedom to do other things. Yes, well, that's exactly that's exactly what I did. All right, you trade the morning and then have the rest of the afternoon to kind of do your own thing, whether it be another business, whether it be investments, whether hanging out with the kids, whether it's, well, these days hanging out at home, not going anywhere. No, but yes, I agree with you. That's this business allows you to have the freedom to do other things in addition to trading. You know, sometimes you have to trade all day, you know, because we're not perfect. Other times, you know, you make your money. We try to focus on making money in the morning and then kind of do your own thing in the afternoon. Go to the beach, fly a kite, start a business, whatever floats your boat. All right, so remember, we have a number coming out here in about a couple minutes now, less than that. So be a little bit mindful here. The White House confirmed plans to hike weekly vaccine supplies to 11 million doses, distributing those doses directly to 40,000 pharmacies. Over in the Senate, the chamber voted 50 to 49 in a straight party line decision to begin the budget reconciliation process, which opens the door for Democrats to push through the COVID rescue package on their own. The move would avoid the filibuster that requires 50 votes for most legislation. Although President Biden did meet with a group of Republican senators on Monday and expressed willingness to agree to some of the modifications. All right, so we have this number coming out here momentarily, so keep that in mind. We don't like to have any positions on when numbers come out, so even though we're coming close here to the 35 area, be a little bit careful. If somebody can retype the levels in there for us, and some of the new folks that are just coming in, if you look at the chat box area, we have the levels printed in there. Those are the levels that we gave out early this morning, and we kind of use as a guide for our trading as the day goes on. We are trying to scalp many S&Ps here. We're looking for opportunities to find where these markets might bounce off of and give us an opportunity to make a little bit of money off of these inflection points. As you can see here, if you look at the ladder ticket, prices have lightened the load here a little bit as we have a little small number coming out here. Again, we don't like to trade when there's a number, so keep that in mind. And there's the number that's out. You can always tell a number is out when there's a little bit of a movement right at the changing of the, and this is why we don't like to trade them. They rallied, then they break. Oh, they were just joking. So I'll tell you a story. When I was trading, we had a number that came out. It was a big number too. And, you know, you when you're trading, you put out, you know, you see the number initially and you know you know what was expected and you know what came out and you know how the market should react, right? So there was this number that came out and I put my hand up to sell the market because it seemed like it was a bullish number for a second. And so I get this broker who flies down from two steps above me to hit me on this trade. And he tells me, "Oh, I'll buy 100 lot from you." As soon as I Didn't even write them down on my card. It was 10 ticks against me. Okay. And obviously the number came out. The initial number was the one that I saw initially was bearish. So I put my hand up to sell it, and he comes flying from the top step to hit me. I mean, I should have known that was going to be. I'm like, why is this guy trading with me? That was my initial thought, and then I'm like, oh, okay, I got to trade, and then all of a sudden it completely reverses. And so I was able. It was a disastrous day. I mean, I ended up losing. Yeah, I don't know, about 1,200 ticks on the trade. Okay, and it was brutal, just absolutely brutal. And what happened was the number came out. The initial number looked bearish, but the revision, right? The revision from last month was bullish, right? Who looks at the revision? Well, guess what I did after that day? I always look for a revision too, in addition to in addition to it was a very costly, not looking at the revision from last month. So that's why sometimes you see an initial burst and then reversal back. Yeah, it was not, and that's the worst part. You lose that money. It was at 7:30, and it's a lot of money, 1,200 ticks, and now you're like, you're just like, it's a Friday, right? It's always a Friday, and now you're just sitting there and you're like, oh God. You take it home with you. What did I do that for? The whole song and dance, right? It was just a terrible day. Just a terrible day. Who wants to lose 1,200 ticks? And by 7:35, number comes out at 7:30. By 7:35, you're down 1,200 ticks. So to learn, like I said, that's why you don't trade numbers. Okay, you got plenty of time to do your own thing after all these numbers come out. You get the trade the volatility. You can see here a little bit choppy. We have resistance up here at 35. Of course, we got up to 33.75. Couldn't inch up a little bit more. So it's a little bit tenuous. Well, we're on the same bar, but if it closes this bar to 35, it's a little bit tenuous. So maybe lighten the load as far as how many contracts you trade up there. Just in case. We'd have liked it to go up a couple more ticks and for us to have our position in there, but hey, didn't. And we always are mindful of the price action in the market. That's what dictates our opportunities. We look at the price action to help us with our entry points, with our decision as to, when to enter the trades, when not to. Screen and chat, same as inside and outside Zoom. I don't know. I have no idea what that means. Screen and chat. Chat box, screen. The screen is I don't know what you're asking me, actually. So I don't want to answer that question unless I know what you're asking me. Screen is, you see the charts, right? Okay. You subscribe. Well, congrats. Thank you for hopping aboard. I just don't understand the question. The screen or chat same as inside and outside Zoom. You're seeing the same screens as everybody else, right? Which is the 3 charts, and the chat box area is separate, and you have that up because you're typing questions in there, right? So you're seeing the same thing everybody's seeing, yes. Same setups, yeah, of course. What do you think? Yeah, of course. I'm not doing anything different. Why would I do that? I don't have a special screen here. What we do though is when we do our education course, we do it in this room, and we ask some of our people who are in at the time to exit who are not part of the course and to come back an hour later or the next day because we do it late afternoon. So as far as our education course is concerned, it's here in the same Zoom room, except we do it late in the afternoon when things slow down a little bit, and so consequently we are we have this, we use the live charts for our the explanation of what we're trying to do. I like to use the live charts. It allows me to tell you exactly what we did that day, why we're doing things, use the opportunities that each day presents. Because as you've been with us a while, or you've been with us, or if you've been trading for a while, every day is a different day, right? There's no similarities. Sometimes they're slow, but there's no similarities to one trading day than the other. Each has its unique opportunities and or not, and consequently, we are we like to use live charts to explain some of the setups that we have and opportunities that we have. So, but we do it in this room. So I don't have anything that I don't show everybody, if that's what the question is. Okay. So again, I welcome the questions. I didn't want to answer it if I didn't understand it. That's all. And I hope I answered it for you. All right, so we again back down here to our pivot. So you can see here we fake the rotation up, and they come back. We're definitely range bound, right? Definitely range bound. It's been pretty much range bound since yesterday late afternoon, and it might be a 10, 15, 20 point range, but we're stuck in this little range. It would have been nice to get the 35 up there. Just missed out. As you can tell, got up to 33, 33.75. And then rotated. I mean, if you are scaling in, differently, maybe a point, even if you did a point, you didn't get it. Point and a half, maybe. But again, it's not, everybody's different. Could I get out of a trade easily trading in the pit? As long as there was a market, as long as if it was 99.9% of the time, yes. The only time it gets a little bit where you don't know what's happening sometimes is if a number comes out and it was a pit with 600 people. So sometimes when there's a number, if you did, and so one side of the pit maybe had one price and the other side of the pit maybe had another price, and that got consolidated to be all on the same level. You always had to make sure you put out the price to the pit reporter so they could put the price out on the screen so people knew. The only time it became a little bit of an issue was right on the release of a number. And that was the only time that you maybe did not have an opportunity to get out of something, only because at that moment for about 30 seconds, maybe, the pit was like trading and nobody knew what the exact price was. You knew, the symbol for 7 and the symbol for 27 or the symbol for 17 is all the same. So sometimes somebody would have a 7 up there, and you would think they're trading at 07 when somebody was trading at 17 on the other side of the pit, right? Because he thought it was 17. So sometimes that happens, and you consolidate and you figure out what the right price is, and you figure it out. But that was about the only time that you had a little bit of an issue as far as getting out of a position on the floor, honestly. Otherwise, you never had a problem getting out of something. The only time, again, and the same thing on the screen here too, electronically. The only time it becomes a little bit of an issue is after a number, right, or after somebody said something. When there's some external news that affects the market, and that's why we don't like to trade numbers or fundamental news when they're released. As you can see here, it's a little choppy, right? Rallied, now breaking, all the same number. But yeah, that was really, I mean, again, the same thing here. The only time you really have a problem getting out of a position here on the floor on electronically is when there's a number or there's some volatility in the market. Let's say when there is, the Fed speaks or the Fed comes out with a decision, or unemployment. If you're trading when unemployment comes out, you get the volatility that slams into the market all at one time. And that right now, nowadays, that opportunity is called algorithms, right? Those algorithms and they're the ones that create the volatility. So we've come here, we've rejected the high, and now we're coming back here to the low. If we reject the low and then go reject the high and we come into the middle of the range, boy, it's going to be a long day trading. Definitely range bound. Well, it is what it is, right? We can only trade what the market gives us. So that's all right. Again, if anybody has any questions, and please feel free to ask. The levels that we gave out this morning are going to be up on the chat box area. They are printed there for you as a guide. Sometimes we have to make adjustments to those levels. And we let the price action dictate those changes, and also dictate the price action opportunities that occur. These are only the levels straight up, but there are price action opportunities that occur once the market paints some bars. So you can, Syed, you can ask a question in the chat box. You don't have to raise your hand, but I appreciate you raising your hand. Just any question that you have, put in the chat box area. If you put it to all panelists, I'm the only one that sees it with Brad. You could just ask your question there. I appreciate questions, especially when we're not doing anything or we're trading in a range. Seems like that's what we're doing. It might be a big range. As you can tell there, we had resistance at 35 and we got up to the 34 area. I am doing micros, so is it okay to sell it for a stop loss of 5 points? Sure, if that's what your targets are. Yeah, I mean, I got no problem if you're learning on the micros, all right? But you get to the point where, if you really want to make some money, the micros are just not, I hate to say this, those micros are not going to be able to do it for you. Unless they're cheaper to trade, which, I don't know about that, but can't imagine them being cheaper to trade than the big one. Algos, what do they look for? There's all kinds of different ones. It all depends on how you program them. Some of them look at the volatility. Some of them look at the quickness of market price action. Some of them will look at prices, levels. Algorithms are out there to be programmed. So there are multiple algorithms doing multiple different weird things. Some of them will trade like you get this little push down here, right? Like below a low or above a high. And some of them will just trade those opportunities as trying to catch a move, hitting some stops. That's all they'll do, right? Some of them just trade. There's all kinds of different algorithms out there that you can program. It depends on the person who's doing it. If I had an algorithm, which I don't like to have for various reasons, because we like to be hands-on, trading, adjusting, because sometimes we adjust our level. If we had to put an algorithm, and this is how rigid they get, you have our levels, right? You can make an algorithm according to our levels with a set stop and a set price action or price target. and the market kind of, when it does that, it'll do that, right? But I like to adjust. Sometimes we say we have to adjust our entry points. So on the upside, we missed it by a little bit, so I would be adjusting my entry point there a little bit, trade a little bit less, maybe adjust a little bit higher, maybe keep it in the same, but keep it less volume of all, so again, everybody, the algorithm doesn't allow you to do that. You have to go basically in there and redo that. So that's why we don't like to put my stuff on an algorithm. At least I don't. Somebody have always asked me to do that. It's not always so clear cut. Remember, this is what we do here. We are traders and we're looking for the market to tell us what we're going to do next. So we have to take the price action and absorb that into our decision making process, and then trade accordingly. The algorithms don't always do that. So again, there's, to answer your question, there's all kinds of different algorithms out there, with all kinds of different programs that allow you to that allow them to trade. So what that algorithm is or what that program is dependent on who programmed it. So again, and like I said, there's all kinds of different ones. There's ones that will only trade when the markets are in expanded ranges, right? Some will also only trade when the markets are in tight ranges. So what can I tell you? All right, so we have market again. Seems like we're a little range bound here. Unfortunately, we did break down below the 20, but quickly rotated back up. Just kind of tells you this market's not going anywhere fast. Doesn't know what it wants to do. 18 and a quarter is your settlement price, in case some of you are looking for what the settlement price is. Yeah. And we have support down at 14. All right, let's see what other things we can talk about. Again, you got to ask questions, because at some point, the quarter that got put into me to start talking runs out of time. So I kind of slow down my conversation here. So you need to help me out here. So GameStop, look what happened to them, right? All of a sudden they're trading like below 100, below three figures. Not a surprise. Reddit crowd, Barstool, the sports founder David Portnoy pulled out of his trade yesterday with a $700,000 loss. Though others like Mark Cuban aren't convinced that the action has run its course, what seems to be the biggest problem is a collective unity needed to band together retail traders on anonymous platforms. Once rumors get out, users become suspicious of each other or bail on the stock. A trade can break down within a session. Duh. People was like, really? This is really going to keep happening? I mean, come on. Just sorry for my sarcasm here. We talked about this yesterday. I don't think we should talk about it again today. All right, we continue to downtick support down here at the 14 area. As we coming down here a bit, trying to see what it wants to do. It's chopping around here. Obviously, a little bit of pressure. They rejected that move there of that high off the number. Missed our entry point by just that much. And yeah, well, let's put it this way: the people who were short this stock and who were able to come up with the margin probably were able to come up with more money to be able to short the stock at $400, and probably made them more money than what they were trying to do to begin with, which was try to hurt these people. Rich people trying to hurt rich people. That's what I keep saying. It's the really, really, the, no idea what these people were doing. All right, so we've come continued to downtick here. We got a little support down here at the 14 area. Okay, we did go down to, of course, down to 15, and bouncing back up here a little bit. The 18 and a quarter kind of took a little bit of heat on it, but they did give you a nice rotation there off of it. If you were using it, you probably would have had to take the 18 and the 14 together. Well, the 18 and a quarter, which was the settlement price. I said that to some of our traders who like to trade the settlement price. You know, I really don't care what these guys are doing. I mean, the fact that they made such a big stink about this, that they were telling traders that they couldn't trade it anymore, right, was kind of disingenuous. I think they were doing it to make sure that they help people. Instead, they took it like they were trying to hurt people. It's kind of a little goofy. Hi there, Ben. How are you? No, the $100 is just to come in the chat room here and kind of listen to some of the back and forth between some of me and some of the traders, and obviously have to listen to Brad every now and then, but that's another story. But yeah, no, the education course is separate than the our room, and we can definitely talk to you about it if you're interested. Brad will give you a call. If you just put your telephone number in the chat box area. It only goes to Brad and I, so we'll be able to give you a call and talk to you about it. So nobody else will see the number in case you're wondering. All right, there. Thanks, Ben. We'll get back to you and give you some details about the education course. Do we get special deals on commissions in the pit? Yes, we. Well, yeah. Well, we got special deals as members of the exchange. So, well, what the deal was you had a minimum that you had to achieve, and my minimum was $23,000 in commissions, and that they would charge me at that point $1. Well, let's say just to round it off, $2 a trade at when I got to 23,000. So once I got to 23,000, after 23,000, each contract that I traded went down to 20 cents a trade. And then after 20 cents a trade, if you got to above 50,000 in commissions, it went down to a dime. So my my like $23,000 level usually came at around Valentine's Day after the beginning of the year. So I was always like pretty much had a lot of commissions to that 23,000. Once you get to that 23,000, it's like then you're trading and you're trading for free almost. It's like it was definitely fun. Not that it mattered, you just you had to pay the piper for the first month and a half. Sometimes it took me a little bit longer, but I always that was my goal, was always Valentine's Day to get to my 23,000 in commissions. So that's a lot of trades in a short period of time, as you can imagine. As we come down here to the 14 area. I'll retest this 14 area for a little bit. Again, lighten the load there a little bit because of where we ended up just a little bit ago. Maybe you adjusted to the lower end, who knows? Maybe you just canceled it altogether. Everybody's a little bit different. You definitely don't have to all trade the same way. We just try to explain the risk to you. And then hopefully you understand the risk and then trade accordingly. So yeah, so that's yeah. So I don't know if I think you could make that deal with any broker. It depends on how much volume you trade. So if you trade a lot, obviously, if you're going to have 20, 50,000 in commissions in a year, you're going to get some kind of deal from your brokerage house. All right, nice rotation there off of our entry point there at the 14 area. If you got in at the lower end, you're getting paid off here a good 3 points. Nice little trade there. Took not hardly any heat on that trade. Got down to actually our secondary support underneath. So it was a nice little trade there if you did get in. And a nice rotation there off of that level. Oscar, all those questions all depend on individual trader and how I would discuss all of these things with you if we were taking our course, and you would be part of that individualized part of my teaching, because I talk to everybody in those regards and try to help them maximize their profits with all those steps. How do you scale in? What do you try to do when you're taking more than 3 points or 4 points? And all those questions that you ask would be more personalized to each individual versus in a general question, because everybody takes different risk tolerances in how they trade. Is it worth buying a seat on the CME? Is it worth it? If you're going to trade, like I said, you have to have, if you're trading, I would say more than 25,000 in commission. Well, here's the deal. I think you could lease a seat for, I think the lease on I'm guessing, I haven't leased a seat in a long time. You can get the lease price, you can get the lease cost if you go to the CME website and type in leases and see how much the lease cost to trade is per month, right? So then you can make that determination as to, you get your lease, you get your discount from your broker because you own a seat, you're leasing a seat, you become an owner, and then you can see how much you trade, you see how much it all depends on your volume that you're trading every month. If you're trading a lot of volume, then you could make that determination based on your cost per trade, right? So it all depends on the number of contracts that you trade and how much volume you trade per day, or whether it's worth it to buy a seat on the exchange or lease a seat on the exchange. Like I said, you can get the cost per month of leasing a seat, and then you are the only one that knows how many contracts you trade. Get the price that how much money you're going to save per trade if you're a exchange member, and then figure out if it's worth it or not for you. That all the again, that's all the when I was trading, I needed to. That's obviously if I'm going to trade, I would have some years I'd give them like 100,000 in commissions. That's after it went down to a dime. So that's a lot of trading. I mean, but that was me on the floor. I don't trade that much anymore. I don't do that anymore. But when I was on the floor trading, I'd easily. That's why they kept me happy and gave me like seats to the Bulls games. If a big broker or trader in the pit, first of all, you're not going to know that from a trader. A big trader is not going to tell you. In the pit, it has big order to buy or sell. Can't you step in front of that order and let his order move the market and help you with your trade? Oh yeah, you could. You could. Let's put it this way. I would be standing next to a broker, and I hear his clerk tell him, sell 1,000. Now, if I went and sold 100 lot in front of him, because I heard the order, right? And then he sells. I sell 100 lot first, and then all of a sudden he offers 1,000, right? Now, let me tell you something. I would get blackballed by the broker standing next to me. The desk would know what I did because they could see me offer 100 lot after he got the order, and they would get really pissed off at the broker for me standing next to a guy that would front run his order, and I would probably never get to trade with that guy again. So yeah, you could, and if you were an honest trader, you would not do that. I mean, I've heard a lot of orders come in there. Here's the best order that I heard coming into the pit, which is very hard for me to trade around when I know. He goes, sell 1,000, but only show 100 at a time. That was how he told. That was what the clerk wanted. The desk told the clerk to tell the broker. That's how he wanted to sell the 1,000. Only show 100 at a time. That's how he didn't want to show him 1,000. He says, sell 1,000, 100 at a time. So how am I supposed to trade that? I just turn around. I just look at him and go, I don't want any of those. That's what I would do. I just, there's no reason for me to trade that. I mean, how can I trade that? So yeah, you tried to front run an order, you're going to get blackballed really fast. Not only because of the person standing next to you knows what's going on, the clerk, the desk knows what's going on, but other traders on the pit are also going to know what's, especially if there's you've been there a while. Yeah, it was very hard to trade when I'm standing there and I hear that. But you know what? I didn't want to get in front of a 1,200 lot order, and I didn't want to do anything to get him pissed off at me. So I just said, I mean, usually they're not going to go your way anyway, right? I mean, if you're going to buy any of those, usually it's going to downtick a little bit. And so you're like, okay, I just look at him. I go, just do your thing. That's what I told him. I go, I don't want it. I don't want those. When the markets are moving around and he gets an order and he goes, sell 100 and boom, that's easy. That stuff's easy. All right, we got a little bit of pressure on this market coming down here to the 04 area. That's our next level of support. We did bounce off of our 14 very nicely there. If you are trading with us, so we bounced off of our 23 earlier. Now we bounced off of our 14. We just missed our upper end of resistance there at 35 by just that much. And now we're coming down here. So yeah, it was a little bit hard not to trade when you hear that, but I couldn't get in front of him. That would not be ethically correct. And the reality of it is, in the pit, as much as most traders are assholes and they're mean to each other and they scream and yell at each other, but your word is about, that's the only thing that you have in there. That if I did something that goofy, I would not be looked good upon, and then you get blackballed, and then you don't want to. Then nobody's going to trade with you. I thought that's what a lot of traders did. Yeah, I know. That's what you thought. I know. You thought it was easy money, right? Easy money. Just get in front of the order. No, it wasn't that easy. I always keep telling you, if you just had tomorrow's paper today, we'd be all happy. We'd be happy campers. It was just kind of the same thing, right? You want me to have tomorrow's paper today and front run a big order coming into the pit. That's right. Only you California people. Only you California people would do that for me. Tell me that. All right. We are a little bit of pressure here. Who knew? Who knows what's going on? But we have support down at the 04 is the next support level. Just could we have gotten short anywhere? I did say if we got short below the 20, we'll make a run down lower. I said that earlier, but then I got a little. It did get choppy there, but you could have stayed short below the 20 and been okay. You never really got exited off of our trailing stop if you were so inclined. You would let me know first if you got a big order. Thanks. That's really nice of you. That would have been really nice of you. See, we could have done great together. Everybody would have blackballed us. The Goldman stories. That's there's always some good Goldman stories. It's hard to, first of all, it's hard to front run the Goldman group. Most traders are counter trends. That's not necessarily true. That's not true. I would say we're just the problem. See, it's hard to put that the definition of a name tag on somebody like counter trend traders. Like all traders are counter. Obviously, because you're standing on the floor and you're standing next to a broker and all the orders are coming in one way to buy it and the market's going up, that you have to sell it to them. I can understand where that concept comes from, but there are a lot of traders out there who got above a certain resistance and then bought it, and then got out when the buyer started. I mean, it's not necessarily true, but I can understand why you could say that. The numbers that I've given, these numbers, but I also did say that we wanted to get short below 20 to stay short, that we would get a little lower. So it's not necessarily, you kind of got to listen to what I say. I did say we have to stay short below 20 to get down to 14. I didn't know we were going to get all the way down here to '04, but you could have been able to get short there at the 20 area for this rotation to the downside, but not all the way. So the Goldman stories, there's a lot of talk. It's first of all, Goldman had a few brokers that they used, so it was always hard. And they also stood next to some of the bigger traders, and so um, the you could always tell what the Goldman person was doing by looking at the big trader, because he would be getting out of those positions. It's hard to, and look, you're standing next to a Goldman trader. The one thing you're going to do is get some opportunity to trade. The next thing you're going to do is go against them a lot of times. And so you can either try to, if you see that they're starting to buy, maybe you can buy extras when you're buying and then force them to keep buying and you can get out, right? Some of the big traders would do this. If he knew that there was a large order to sell like 1,000 lot, or to buy, there was a stop to buy 1,000 lots, like 10 ticks higher. Maybe the Goldman broker might have told him that I got this big, if they're friends. Not saying it always happened, just sometimes it might have. Take what I say with a grain of salt. I didn't say this is happening. So maybe. Besides that, the pits are closed now, so maybe I could say some of these stories. But anyway, they knew that there was a stop 10 ticks above. Maybe that bigger trader would have been buying it, forcing the market to get to that price where the broker would hit a stop and he would sell it all to him. And so that could happen. But Goldman was always they always kind of knew what was going to happen before it happened. They got themselves in trouble one time because they front ran an unemployment number. You're talking about front running a trade. How about front running an unemployment number? And they actually got themselves in trouble. And they ran it. They ran it in front of one of the bigger traders there, who, you remember I said that the big numbers were released at 7:30. And so you started at 7:20 trading, and then all of a sudden this big trader, who everybody knew, and was buying buying everything, like before this number. And it's very rare that you get all this activity before the number. He kept buying it, and the number comes out, and it's bullish, and it rallies another point after the number. And my clerk comes up to me and says, "Oh, this big trader, he's down 6.5." And they're taking him off the floor because he had to come up with some margin, right? He's talking about margin for Robinhood. He had his own brokerage firm at the time, so he had to come up with some, but he knew what Goldman was doing, and he was buying it like crazy. And the broker was probably, he didn't want the broker to put the order in the market, so he was just doing it for him. And he was buying everything that he could and still lost 6.5. The market rallied. So that shows you how short he was on the back end. So even if you know what Goldman's doing, sometimes, it doesn't matter. You're going to get hurt. So anyway, Goldman did, they ended up taking him to arbitration, and anybody that traded with Goldman that day got some money back, believe it or not. So they made, like, oh yeah, he still lost money. They made $20 million or $30 million on the trade, but had to pay back $5 million. That's what they always do. That's what always happened to them, is when every time they found out that they did something wrong, they get they made 20 million on the trade, but they got fined for 5 million without assuming any claiming that they were guilty or not. Oh, that almost makes sense. How do they know what's going on? You tell me. Why did he still lose money there, Peter? Well, because let's put it this way. He was buying everything that he could. The problem is the broker would tell him I'll buy 1,000 at 10. So he'd start buying 10s and 11s and 12s, and he's losing money on those. And then it's trading at 14, and the broker comes up to him. He goes, I'll buy another 1,000 at 18. And so he starts buying 15, 16, 17, 18, 19s. And then he doesn't buy enough because he's selling them 1,000 at a time. He's only buying 300 or 400. Then when it's trading at 20, he goes, I'll buy 1,000 at 25. Now, if the broker had to go out there and try to buy 1,000, right? He would run the market up like 15, 20 ticks because nobody's trading at that point, the right before a number. So there's not that much volume at that particular moment in time. So he would run so the trader standing next to him, he didn't want him to run the market up because he knew that if he put the order in the market, everybody would see what Goldman's doing and they would front run the order too. They're not selling it to Goldman. They know that Goldman wants to buy it, so they'll just rally it more before they sell it to him. It still might not be good, but the point is they'll rally it more. So instead of putting it out to the market, he sells it to him, and then he tries to buy some more, but he's not buying enough. So yeah, that's what they did. So yeah, that was a bad day for him. That's for sure. We knew something was up. I mean, we're all watching and we're like, what is going on over there? And, of course, bad news always spreads fast around the floor, right? Especially with the clerks outside because everybody's talking to each other out there. We knew something was goofy on the floor. I mean, in the pit, but I didn't know it was that bad. So yeah, so now that does happen. Yeah, it definitely does happen. So it's hard to front run any of those orders. All right, we spiked down there to 08 area, and we were looking at 04. Come back up here really fast. So we had a nice opportunity there at 14, another nice opportunity at 23. We had price action opportunity against our green band earlier. So we've just basically, we tried to keep you short there below the 20. And obviously now if you had a trailing stop, you were out above 14. And now we're just kind of hanging. Yeah, that is bullish, but you didn't know that was going to happen right away there, Peter. So did continue to rally. So we've had a few nice trades. We have to be a little bit patient here as the market was definitely took its time doing all these things. It happened after the 9 o'clock number that we finally got some movement. What would stop a trader from buying or selling a lot of contracts when they didn't have enough money for them? Sure, that happened. That's called the O'Hare trade, right? You ever hear of the O'Hare trade? A couple guys would, you would come in there. This happened one time where this one firm let this guy gives him a $50,000 check, and they said, okay, you can go trade that day. It was an unemployment day, and he basically they didn't even let the check clear. Okay, I'll start the story that way. And they basically told him that he can trade whatever he wants to trade, right? And so he goes and stands in front of his broker from this firm, and he's given his broker these orders: sell 100, sell 100, sell 100, sell 100. This is all before an unemployment or a big number. And so he had like 1,000 contracts that he had on, and the market went against him. All of a sudden, the guy's gone. right? Completely gone. And they lost like, I don't know, $1 million on the trade. And the guys know, probably went to O'Hare and got out of town. If he made money on the trade, he'd stay and collect his check and get out. But of course, the $50,000 check didn't even clear the next day. So somebody allowed this guy to trade and trade as much size as he wanted because they thought he was legit. And well, they ended up eating it. And the guy's all of a sudden not around. The market goes against him. Then all of a sudden, like 5 minutes later, the broker's like, "Hey, you got this 1,000 lot on. What are you doing?" And they go tell this firm upstairs that this guy did what he did. I'm like, "Oh my God, let me get out of here." Yeah, that's what happened. How's he doing? How's the firm doing? So the firm had to eat the loss. Eventually, I think they might have found the guy. I don't know. Uh, I don't know if they found him or not, but that is called the O'Hare trade. But you trade way over your limits. Most people are not, they don't have these devious uh, uh, reasons, and you can, and but yeah, this guy, he did do that. It was a true story. And so we're standing in the pit, and then we're watching this guy from the firm start buying all these contracts. I'm like, why is this guy buying all these contracts? I'll find out later that as the guy was selling them in the morning, it was adios, and so they had to bring in a couple brokers to cover his position later on. That was that was interesting. So that does happen, and the brokerage house is responsible for the to cover the guy's trades, whether they had the money in the account or not. So that did happen. Yeah, well, there's your answer. Again, right up to our blue band there. If you're trading and watching our blue band there, it's a little bit of an opportunity for us. First rotation back to it. Blue banders are loving that trade. Again, this is another trade that we don't talk about. That's there. I mean, if you've been with us a while, you know about it. But it's a nice little pull back off of kind of nowhere, and the market rotates here very nicely off of that level. So nice little opportunity there for you if you got in there. Mark's going to the beach after that trade. Yeah, I knew that was happening. All right, so nice little trade there for you if you did use our blue band as an entry point for that little short. Again, this is what we try to look for, these price action opportunities that are out there. And we kind of, anything that I'm talking about is a taught experience. We kind of show you where these levels are, show you why they would work. And the most important thing is to make sure you have reasons to trade. As long as that's the case and they work for you in the past, that's what I suggest you keep doing, right? Because it's not a bad trade. Anybody have any questions, please feel free to ask. As Mark has been giving us good opportunities here. We're patient, we wait for them. You got to wait for the opportunities there. You can't just, um, just trade market when it's moving around. Yeah, we are going to have a class today. So those of you who are part of our course, 12 o'clock Chicago time, we have our class for those of you who are part of the course. We'll be starting around 12. All right, so nice little rotation there off of the blue band. We had support there at 04. We only got down to 8, and then we got down to this 04 area and come back up here. I mean, 04 is where we had our level. Below, we have 37.94 is the next level below 04. Then we have 86, 75, and then 64. Those are levels below the 37.94 in case they decide to rotate it lower. But who knows? I'm just giving you some low. I have no idea what's going to happen. All we can do is trade the market and trade our opportunities. Nice little trade there. If you did take our blue band, if we get above 24, we'll probably look for a little bit of a rally going up to at least to 28. And if we get above 28, maybe even the well, 29 is our pivot. So if we get above 24, we'll look for 29. We get above the 29 area, we'll look for a push up to that 35 area that we have. So we don't know that's going to happen. All we can do is have the exit strategies ready in place in case you're going to look for them right now. Support. Well, I would, we get below 14, we could go down to 10. We get below the 10 area, go retest the low, and even maybe go down to that 04. Who knows? But there's different little levels of support on the downside, but there's pressure. So you have to take those secondary support levels a little bit with a grain of salt. All right, we'll take a little bit of a break here, come back in a bit.
Hey, a couple quick shout outs and programming notes. For those that want to sign up and be part of this, come back tomorrow, come back when you want, come in and out as you please. Saul has a monthly opportunity for everybody. Got quite a nice group in there now. So if you are new coming in here, raise your hand and I'll send you out the information. Ben H, let me know. Hey, Chad B, haven't seen you. How are you doing? Solid mentioned he's having class today, right? Just so you know. Hey, Ron. Hey, Ron, I think you were already signed up for it. Is that not the case? I'll send that to you anyway. You can look at it. But thank you for raising your hand. Ben, let me know. Greya, let me know. Michael K, let me know if you finished that. Michael R, Nicola. Robert C. The class is for individuals that are part of the family, which you are, and you have the opportunity to sign up, or actually, I should put it this way, you have the ability to have a trading consultation, and then Saul has a private class set up, private mentoring that is a add-on to the monthly. And if you want to know about that, we can certainly talk about it because you're part of his monthly. Now, Ron B, you're part of Saul's monthly, right? So you would have to sign up as part of his mentoring and classwork, and that's an additional conversation and an additional opportunity. What I was sending out is the opportunity to become part of the family. So Ben, let me know if you're back. Um, Robert C, let me know that you are there and that you signed up so you don't get caught up in that AI, the artificial intelligence, and end up in Zoom jail. Nicola, let me know what you're thinking. Nikolai, let me know what you're thinking. Hey, Robert, did you sign up for Saul's monthly? Usually the AI sweeps you out in the morning right before he gives out the levels. So you don't want that to happen. So how long have you been looking there, Robert? Just give me some dates. Michael R, Michael K, let me know if you were able to find the link. And Ron, I'm going to take down your hand because I think you're already signed up. So why don't we make the transition today for you, Robert? Because I think the AI is going to take you out, um, at the end of the day. So I want to be able to have you come back. Hey, Ben, yeah, that's as you probably read it, right? It's an opportunity based on some savings. I mean, you just came in today, Ben. If you want to spend a couple days, that's fine. I mean, are you interested in this type of thing? Are you looking to either learn how to trade or get better at your trade? And did you like what happened here today? With Saul. So Ben, let me know that. I like to get a feeling about how people are doing. Well, I think I would take advantage of the number today. You know what I mean? Like when you read it. it's helping you out in a pretty significant way. So I would do that if this is what you want. Robert C, I would do it very quickly also. Just been way too long. Nicola, let me know what you're thinking. Michael R, I don't think you're part of this. Just let me know back in chat. Sometimes I get confused. Mike, okay, I know you got yours. Viger, you're part of it. Okay, I'll be in the background looking for to authorize those individuals that just signed up in the background. For those that are coming in on the outside, join us on the inside. Right now it's 11:13, so I'll be popping in and out. Everything we do is for educational purposes only. Nothing is to be taken as direct trading advice. Once you become part of the family, we can talk about where you are in your trading and where you'd like to be, and talk about Sal's mentoring and his coursework if you so choose. But you can certainly stay as a monthly. There's a lot of advantages getting Sal's the opportunity to hear the levels that Sal is looking at for today's trade, the commentary. As I say, it's worth its weight in gold. Hey, Roop, we can talk about that. Just post your telephone number. You're part of the family. Or if you want to ring us at 312 685 2582, that's our number in Chicago. 312 685 2582. So, Ben, let me know because I got to authorize you in the background. Michael R, Michael K, let me know. Nicola, let me know. Robert C, definitely let me know. I'll be in the background. Just keep me posted.
All right, we can see here we've tried to hold that 23 area. We got above it now, and as long as we stay above the 16 area, we're a little bit bullish. We were a little bit bearish earlier, and now we're a little bit bullish based on the price action activity. The next level of resistance on the outside, I think if we get above, like I said earlier, the 29 area, we should maybe go retest our resistance up there at 35. The resistance level on the upside, we have 35, 43, 52, and then 62. But we have to hold here um, above 16. And if we can hold here above 16, we could maybe make a push a little bit higher, but we have to hold above the 16 area. So you can obviously find how much risk you want to take and do the appropriate entry points. At least for the time being, that could change based again on the price action. All right, we've had a few nice opportunities this morning. We were patient enough. We've had 3 or 4 good trades, I think. And we can chalk those up to 3 or 4 good trades. Obviously, our support and resistance areas were simple ones, but there were some more price action opportunities that occurred. Roop, I hope you got your answer there to your question about our class. I wasn't, I don't know if Brad gave you a call back or not, but hopefully he did.
Hey, quick shout and welcome to Charlie. Hey, Charlie, did you need me to give you the levels from this morning? Or would you like me to give you the levels for this morning? Absolutely. Just got to scroll back and see where they're posted. I got support at 38.29. I got the support at 38.29. I'm sorry, the pivot at 38.29. The pivot at 38.29. Got support at 23, 14, 04, and 37.94. Resistance at 35, 43, 15, and I'm sorry, 35, 43, 52, and 62. Hey, quick shout out to Adam P. Hey, Adam, welcome back. Hey, Adam, give us a quick sound check. Hey, Adam, let me know if you need us to read off the levels for today. For those that are coming on the outside, join us. We're coming up to the noontime hour here. Everything we do is for educational purposes only. Nothing is to be taken as direct trading advice. Check out the link and join us in Zoom Live.